What is going on, guys? It is James here from Celestin Capital, and welcome to today's video. Today we're going to be doing an outlook on these three pairs that I trade, which are GU, Gold, and GCAD. And I think it's important for us as traders to make sure that we stay ready so that we don't have to get ready. You know, before the market even opens, before the new week even starts, I already know what I'm looking for, what I'm anticipating for the market to do. That doesn't mean I know what the market is going to do. I'm just anticipating what it's going to do. So I'm already anticipating what the market's going to do. I know how I'm going to enter into the market, and I know how I'm going to exit the market. And these are three things that are in my mind whenever a new week comes, or whenever I'm getting ready to enter into the trade, whenever a new week or a new day comes. And so I think it's important for us to make sure we understand what we're looking for before the market even opens. And that's exactly what we're going to do here. I'm going to go over these three pairs, and it's not going to be too long of a video, but I'm going to show you guys how I think and how I go about entering and exiting the markets. So before I get into the video, here's a quick note I want you guys to understand. These are the three entry criteria that I look for. Whenever I open my charts, these are the three things that I'm looking for to enter into the market. And Wyckoff slash shift of microstructure. So these are the three things that I'm looking for whenever I open my charts. Structure, followed by supply and demand, or order blocks, whatever you want to call it, and then Wyckoff, which is simply a shift of microstructure, because that's all Wyckoff is, a shift of microstructure. So structure is important because structure gives us the overall direction of the market, right? Either an uptrend or a downtrend. We don't want to be selling in an uptrend, and although you can, there's a certain way that you have to do it. But for the general idea, you don't want to be looking to sell in an uptrend, and you don't want to be looking to buy in a downtrend. Now, when it comes to an uptrend, or when it comes to structure, the market doesn't just go up all the way, go up 100% of the time, nor does it go down 100% of the time, as I said in my market structure video. If you haven't seen that video yet, go ahead and check it out. But what I do know about the market is that the market has phases where it pushes and pulls back. So as you can see, a push, pull back, push, a pullback. So what I can expect the market to do when it pulls back is pull back into a supply or demand zone before continuing structure. Potentially pull back to a supply or demand zone. The market can do whatever it wants to, but I'm anticipating for it to pull back to a supply or demand zone. In this case, in an uptrend, I'm looking for it to pull back into a demand zone. In a downtrend, I'm looking for it to pull back into a supply zone and continue structure to the downside. So what I see here is when the market pulls back into, let me get rid of this actually. When the market pulls back into a supply or demand zone, I don't want to just take the entry automatically. What I want to do is, so when the market pulls back into a demand zone, I don't want to just buy it off of here. What I want to see is for the market to struggle to continue to the downside. What I want to see is the market shift structure fractally. So I want to see small breaks to structure signaling that the market wants to reverse or go in the opposite direction. You see this? Rather than hopping into the trade automatically and the market just wiping me out completely, what I want to do is, once the market gets into my area of interest, which is this demand zone down here, I want to see a shift of microstructure, aka Wyckoff. I want to see the market break structure highs and continue to do that, bounce off demand zones within here and continue to break structure highs so I can get an entry and take it to the upside. Same case with the downtrend. I don't want to just get in off of the supply zone. What I want to see is the market struggle to go up, and I want to see a shift of microstructure. I want to see the market break to the downside and continue to bounce off supply zones and break to the downside so I can get in and take it to the downside. So that's the three entry criteria that I have, or these are the three I guess, pillars that I look for whenever I am trading. So let's go ahead and hop into this video. I think I've said enough, and I think you guys understand what I look for when entering into the market. And so I'm going to show you guys a live example of this. And as you can see, I already have a potential entry on GU. So let's go ahead and look at structure really quick. We can see that we are, of course, on a downtrend. The market is bearish right now. Lower highs, lower lows, lower highs, lower lows. But there's something that happens here, just as I told you. The market, let's go to the daily actually. The market has, weekly. The market has gotten to an area of interest. I'm expecting the market to mitigate this and continue to the upside. I don't want to put this just because it hurts my eyes whenever I put this gray spot. I might have to change the color. But the market has gotten into an area of interest. And not only that, the market has broken structure. As I told you, remember, I want to look for breaks of structure fractally so that I can confirm that the market wants to reverse. And as you can see, let's look at this microstructure. We see low, lower high, lower low, but the market breaks this previous high. That's why I have this BOS line right here. The market breaks this previous high. So what can I expect? I'm expecting the market to retrace back. In this case, I'm expecting the market to take out this liquidity down here and continue to the upside. So I'm expecting the market to pull back, liquidating these lows, these equal lows, and continue to the upside, potentially to this liquidity or into this supply zone over here. So that's why I'm targeting right beneath this supply zone, because I'm expecting the market to pull back either to continue to the downside. Let me get rid of these. I'm looking for the market to pull back to the supply zone to continue to the downside, or if not, the market's just gonna keep going up, and I'm already entered into the market, so that's even better for me. So this is my outlook for GU. I'm expecting GU to be bullish this week. Bullishness on GU this week. Again, I'm no financial advisor. Anything I do or say in this video is based on what I think about the markets and how I see the markets, and based on my experience trading the financial markets. So again, I'm looking for the market to liquidate this low right here and continue to the upside on GU. So for GU, bullishness. For gold, now a lot of people might trade based off of, just because the dollar's in both, they like to look for the same, or they call it pair correlation. That's what it is, because the dollar is the quote currency in both. So if the dollar goes up, they're expecting GU and gold to go down. If the dollar goes down, they're expecting GU and gold to go up. So they're basically looking for the same entry, the same position on both. So if they're looking for longs on GU, they're looking for longs on gold. If they're looking for shorts on GU, they're looking for shorts on gold. That's not how I trade. I like to trade each pair individually. It just so happens in this case that I'm looking for bullishness on both this week. So I don't want you guys to think that I do pair correlation. It's not the case. It just so happens that I'm expecting both to be bullish this week. So with gold, as you can see, we are, let's actually look at this, bullish up until this point where we've broken structures to the downside. But again, the market has retraced back to this demand zone, so I'm expecting the market to continue to the upside. I'm expecting the market to drop down a little bit more, but I may potentially take an entry inside of here just because of what happened at the end of last week. Let me tell you, or let me show you. So we can see that, if it's not obvious, we can see that the market created a high right here. The market came down and then broke this high over here. So because of how impulsive this break was, I'm expecting the market to come down here and mitigate some orders down here, which is potentially what it's doing right now. And I'm expecting a retracement back into this supply zone to sell off a little bit, and then from here, I'm looking for buys in this area. So again, I'm looking for gold to be bullish this week. You can catch some sells, but I'm expecting sells only up to this demand zone right here. I may look for a sell in here, or I may just hold this buy, and this buy might just shoot through the supply zone and take out liquidity all over here. So for gold, I'm looking for bullishness. I'm looking for it to retrace back into this demand zone over here. Looking to get this entry right over here. Boop. Continue to the upside. So that's my outlook for gold and GU. And let's take a look at one more, which is GCAD. GCAD is a really nice pair, even though it was consolidating for a few months. I think it was a few months, a few weeks, whatever it was. All right, so for GCAD, as you can see, the market was bearish. Now the market has broken several structure highs, break structure, and break a structure over here. So what I'm expecting on GCAD is for a retracement back into this demand zone and continued bullishness. So for GCAD, I'm looking for bullishness as well. I'm looking to catch an entry into this demand zone over here. It might not retrace this hard, but again, we'll see. I'll look for one more impulse just to confirm that it's not going to come down here. If it gives me a pullback and then another impulse, too many lines, hold on. If it gives me a pullback and then another impulse, then I'll take entry off of this demand zone rather than this one, and this will be invalidated, no longer exists for me. So that's what oh yeah, the reason I have this right here is because if it breaks this low right here, if it breaks this low, I'm going to, so if it does something like this, I'm going to take sales off of this supply zone into this demand zone, potentially, or at least to fill in this IPA, because I see nice IPA that I'm expecting it to fill in, and then continue to the upside. So short-term bearishness for long-term bullishness. That's what I'm looking for on GCAD. And those are my 3 weekly outlooks, my 3 outlooks on the pairs that I trade for this week. And we'll see what happens. I may update you guys if I remember. Maybe one of you could remind me in the comments below. I might update you guys just to see how it played out. And again, I hope you all enjoyed this video. Hopefully this gave you guys some insight into how I trade, how I see the markets, and hopefully it helped you guys out a little bit just to, make sure you stay prepared so that you are ready for whatever happens. So if you like this video, be sure to hit the like button. If you didn't, hit the dislike button twice, all right? Make sure you hit it an even number of times. Don't hit it an odd number of times. Make sure you hit it an even number of times. So, all right. Peace out, guys.